Welcome to another weekly deal analysis on the Corner Barn podcast. I am Chris Thompson, that bearded guy, the creative guy. Today, we're going to analyze another deal that I find on the internet, just a random search. We're going to analyze it for a cash deal and a creative deal. So let's jump into it. So today we are going to dive into 4419 Oliver Street in Fort Wayne, Indiana. I literally just scrolled to it and popped it up. Hold this house up and let's analyze it. So this is a 2-bedroom, 1-bath house, 725 square feet. This thing is small. Been on the market now for 64 days. A lot of people have looked at it. And this, honestly, this tells me I smell blood in the water. Why? Because from where the numbers were to what they're asking now, I think it's pretty high. So they started, they've already reduced the price. Wasn't a lot, but they've already reduced the price. Taxes really aren't bad, 1153. And as you know, if you caught the last episode, I like to jump on here and just kind of see what the rough estimates are. Whoa. I'm seeing a lot of 80s and some 90s on here. So I think this thing's really overpriced, but let's go break the numbers down. So as you know, I like to use the Invest Nest. It's a great software. It has a great calculator. It's almost kind of like a mini CRM too. But if you like the way it works, check them out, theinvestnest.com. If you use my code at checkout, Chris Thompson Real Estate, you get 50% off your first month. I think that makes it like $7. And you can even try it for a week for free. So here's our property. Estimated value is 114, probably because that's what they're listed at. Estimated rents is 911. I think it's going to be a little bit higher than that, but probably not a ton. Owner details. If you caught the last episode, you know that they offer skip tracing for free. I'm not calling on this one because it doesn't really fit my buy box, but I could simply do it with a click of a button. Finance details. This tells us anything. Oh, this does tell us a lot right here. So it looks like they bought this thing in July using a credit line for $86,000. Who thinks they overpaid for this thing? So this is owned by an LLC, which tells me right away that it's an investor. Location, Allen County, that'll come into play in a little bit. Property details, building 52. So if you are doing a rental, you have to have a lead test done. Make sure it is clear from lead paint. It does have a detached garage, which reminds me, I forgot to look at the pictures. Let's jump back there for a second. All right, so roof looks pretty clean. Looks like it's just got some debris on it, but overall, I think the roof's in good shape. Siding looks to be pretty good. No real major trees over top of the house. Here's that garage. Really just probably a power wash and that thing will be good to go. These guys probably look like flippers if I'm guessing. So why they didn't clean that up, I don't quite understand. Oh, that's pretty. We got baseboard heat, ceiling fan, looks like new windows. Oh, that kitchen looks pretty too. New cabinets, range. That is gas range as well. I'm sure it's gas. No, it's not gas heat. It's electric heat because we saw those baseboards right here. Can't really see much of the bathroom. It's kind of a bad picture, but clean and new. All right, so let's jump back over here and we're going to calculate our returns on this deal. We are going to name this 4414 Oliver Street. Our purchase price. So they're asking 115,000 for this. It's probably a little high, but for this conversation, we're going to use those numbers as our calculation. So we're going to take 65% of that, and that's what our offer price is going to be. 74,750. You know what? We're just going to round up to 75,000. So our purchase price is going to be $75,000. Closing costs, we're paying both sides, 2 points. 2 points if we're using hard money. Improvements, power washing's probably not a whole lot. The rest of the house looks pretty freaking clean. So let's just drop in 2,500 just to be safe. Our down payment, most hard money lenders are looking for 20%, which is 15,000. And our rates right now are about 7.5, and we want a 30-year loan. All right, rental income. Again, I like to use HUD. And for a 2-bedroom, they're saying 1,030. And this is saying 911. We're going to kick it up to 975. Property taxes, because it pulls that straight. Insurance, $100 a month. It's probably going to be cheaper than that because this place is pretty tiny and it's just a landlord policy. But we'll leave that in there for now. 10% management fee, $98 a month. Tenant's going to pay all of our utilities, so we don't have to worry ourselves with that. Overall, property seems in great shape, so I think we're going to keep our reserve fund or war chest to 5% for each. Appreciation rate in the area, let's do a nice safe 2%. Rent increases over time, about 2% seems reasonable. Holding period, we're going to plan to hold it for, we'll hold it for 10 years. And commissions, we're investors. We don't pay for retail prices, so that'll be 5%. All right, you ready for this? So for basically just over a $20,000 investment, we're going to make $165 a month. And that's with reserves, excuse me, after reserves. So I like to come down to here, breaks all of our figures down so we see where everything is. We know our war chest is going to be $146.25 a month with cash on cash return of 9%, or excuse me, 9.25%. Pretty good rate, but they also have to accept it. Knowing what they paid for it, which if we jump back over here, for finance details, we know, or at least we're pretty sure that they paid 86 for this. So, and I'd be really willing to bet that they renovated this thing because they just bought it in July, and yeah, they've held on to this thing for too long. I think they took too long on the renovations or had a tenant issue. Who knows? But they paid more than 75 for it and they put work into it. So I doubt they're going to come back and agree to that price. So we know that's what they paid for it. All right. Now the fun part. Let's do a creative deal. All right. So our ARV, we're going to say is 115. Our purchase price, I'm coming in about 10% low. Let's see what, let's see what $100,000 look like. $100,000. And our interest rate, we're going to try to see if we can get away with 4.5%. Now, how do we find our PITI? We go to bank rate. Bank rate. All right, so we're going to offer $100,000. Wrong button. $100,000. And we'll try to get away with 8% down. Do here. Fix this. 8%. Hopefully that'll work. I've already plugged in our zip code, property taxes. Uh-oh. Already plugged all that stuff in. All right, so our property taxes are, this one's saying 55.82. And they're saying 73. We'll split the middle and call it 60. Insurance, we said we're going to keep it $100 a month. Let's look at our magical payment here. Uh-oh. That work? Yeah, don't put the purchase price in the down payment box because clearly it causes an issue. All right, so our total PITI is 626. Plug that in over here, 626. And our potential rents, we said we're going to be 975. The calculation disappeared on me. All right, well, learning lesson. So equal our potential rents minus our overhead. So we're looking at a gross cash flow of $349. And we said our war chest is going to be 146. War chest 146. Management fee was $98. And this formula got messed up also. I really need to lock that in. So we're going to do our gross cash flow minus our war chest minus our management fee. That's going to give us $105 a month. So not as great of a return, but still a good return. Let me show you why. All right, so our cash to the seller, I think they're hurting, so they'll probably take something pretty low. We're going to offer them $2,000. The agent, see if we can get away with 2%. Oh, 2% of $100,000. No assignment fee because we're keeping this thing ourselves and we didn't pick it up from a wholesaler. Closing costs, they are already calculated for us over here. And our closing fees are $2,700, 3.6%. Renos, as we said on the cash analysis, we're going to throw 2,500 in just to be safe. Our carry-in costs are going to be 626, so that's 1,250, just shy of 1,250. No arrears, so we're not worried about that. TC, as we talked about, a good TC is about $1,000. So for $11,500, not a great deal. Let's see what happens when we adjust this rate down. Let's try 4%. And let's go back here and do 4%. Update that. All right, so that, well, dropped to 26 bucks. Nothing earth-shattering, but still pretty good. So our PITI drops from 629 to 599 and increases our cash flow a little bit. What is the greatest part about this? Only $11,500 versus our cash analysis. We're at 20. So we're almost at half. And we obviously can adjust the numbers to see where we're at with that stuff, but $20,000 to get 155 back, or $11,450 to get 130 a month back. Now, the rates are a little bit higher than that, but remember, we're keeping our war chest of those 5% for CapEx, vacancy, and maintenance and repairs. So you get all your cash back out in just over 7 years. Pretty good analysis, pretty good deal. So that is our cash and our creative analysis breakdown of 4414 Oliver Street in Fort Wayne, Indiana. Thanks for tuning in this week. I am Chris Thompson, that bearded guy, the creative guy. Hope to see you here next week. Thanks for watching.